What if I told you that building a $100,000 investment portfolio doesn't require a six-figure salary, a finance degree, or winning the lottery? In fact, many successful investors started with less than $100. The difference wasn't how much money they had. It was the habits they built, the mistakes they avoided, and the power of time. In this video, I'll show you a realistic roadmap to building a six-figure portfolio, even if you're starting with just $100. And near the end, I'll reveal the one mistake that quietly destroys more investment portfolios than market crashes. Let's get started.
Step 1. Forget getting rich overnight. Social media is full of people claiming they turned a few $100s into millions in just months. But that's not how wealth is built for most people. Real investing is boring. It's consistent. It's patient. And that's exactly why it works. The people who become financially independent usually aren't chasing the next hot stock every week. They're following a simple plan for years. If you can accept that, you're already ahead of most beginners.
Many people delay investing because they believe $100 is too small. But the amount isn't the most important part. Starting is. That first investment teaches you how markets move, how emotions affect decisions, and how to stay invested during ups and downs. Think of your first $100 as buying experience, not just investments. That experience becomes incredibly valuable over time.
Step 3. Invest consistently. Here's where the magic happens. Imagine investing a fixed amount every month instead of waiting until you feel ready. Some months the market is high. Some months it's low. By investing regularly, you naturally buy more shares when prices fall and fewer when prices rise. This approach removes emotion from investing and helps you stay consistent over the long term. Consistency beats perfect timing almost every time. Step 4. Focus on diversification. One of the biggest mistakes beginners make is putting all their money into a single stock because it's trending. Instead, think like long-term investors. Diversification means spreading your investments across many companies or assets, rather than depending on one winner. That way, one bad investment is less likely to derail your entire portfolio. The goal isn't to hit the jackpot. The goal is to steadily build wealth over many years. Step 5. Let time do the heavy lifting. Albert Einstein reportedly called compound growth one of the most powerful forces in finance. Whether or not he actually said it, the principle is true. Your investments don't just grow. Over time, your earnings can begin generating their own earnings. That's why starting today, even with a small amount, can matter more than waiting until you have thousands of dollars. Time is an investor's greatest advantage. Building a $100,000 portfolio isn't about finding a secret stock or getting lucky. It's about starting, staying consistent, investing wisely, and giving your money time to grow. The sooner you begin, the more opportunities time has to work in your favor. If this video helped you understand the path to long-term investing, subscribe for more practical finance content designed to help beginners build lasting wealth, one smart decision at a time.
If this video changed the way you think about money, hit the like button, subscribe for weekly wealth psychology and investing videos, and share this with someone who's serious about building real wealth. Your future starts today. If this video changed the way you think about money, hit the like button, subscribe for weekly wealth psychology and investing videos, and share this with someone who's serious about building real wealth. Your future starts today.